And good afternoon, everybody. This is Michael Filigara. I'm with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott Wave update for the NASDAQ 100 for Tuesday, July 6th, 2021. Markets did pretty much exactly what I expected today, although they were not all in sync. And what I mean by that is that for the better part of the day, the NASDAQ remained higher and worked its way higher while the Dow, the Russell, and the S&P were lower. And the S&P was basically dragged lower by the Russell and the Dow and assisted to not drop as much as I think it could have because of the stocks that are in the NASDAQ holding the market a little bit higher. In any case, the NASDAQ today did move up and it got very close to 14,800, got up to 14,790. And that I mark as the completion point for our sub wave 3. And on that is, so it was a 3 of 3 move and really just finished and did exactly, it was very classic, let me say, because it is the longest and the strongest within the sequence. And it just really moved very quickly on within its impulse parts of it. So the impulse was 3 of 3 of 3. And then we had another impulse in wave 5 of 3. And immediately was followed by a pretty strong sell-off of over 100 points. And that just actually just put in that sub wave 4 that we were looking for. And then the market picked up the rally again. And if it wasn't for the open closing bell, I think the market could have reached back above and gotten up to 14,800. We'll see how it actually does, because now, of course, we're waiting and we'll be closed in a little bit and then reopen for Globex. And then we have to wait for the Asian markets, European markets, et cetera, et cetera. But here's what I'm looking for now. With this being complete, we're now going to be looking for the completion of the subminute wave 3. So we've done waves 1 through 4. We're in the 5th, and expectations would be for it to actually get its up above 14,800 and up into this zone to complete. Now, by today's completion of that 3rd and then the 4th, it allowed me to add Fibonacci extensions so that we can get some idea of where wave 5 should complete. And as we can see, it's kind of getting held up down at a 50% level. And I don't expect that to continue, obviously not. The next one up is the 618. Now, often that is a common relationship that wave 5 within a 5-wave sequence, impulse wave 5 will come in at 62% of wave 3. And that level will be right there at 14,822. So that's why I do think that even as a minimum, we should get about 14,800 on this last rally up to complete that subminute wave 3. And if we get a full kind of blast higher, then I expect, because we get both a 70.5% for what wave 5 would be against wave 3 within that sub level move. And then we have the potential of it also stopping at the 70.5% of where subminute wave 3 would be, actually it's going to be larger, that the minute wave 5. Yeah, because I haven't drawn one for this level. So yeah, we're not finished with it yet. But I'd be looking for to somewhere between here at 14,836 and 14,000, excuse me, 822 to 8, we'll call it 840. So 820 to 840 is where I kind of expect that this will complete. And then we'll get another pullback, another 4th wave pullback at a subminute level, 4th wave. So once we have that level in and we can label it, then we'll be able to put retracements out there And then we would run them from where wave 3 started to where wave 3 finishes, and then we'll get those levels. And I would suspect that it's going to look very similar to what we did today. Just this really kind of sharp little dive, and then it just bounces right back off of it. So that's about all I can really add today, except that we are continuing to finish a minute fifth wave, which started all the way back a million years ago, it feels like, at 13,960. And this is where the minute 5 began. And where that still projects to finish up is up here. So wave 5 would be equal to wave 3 at 15,020. We have where once I do get that larger 3, I will then, excuse me, the subminute wave 3 complete. I will add an additional, and wave 3 and wave 4, I will add an additional calculation, which should again start to hone in on these levels to where I think we should complete. Wherever this 3 completes, pulls back, I would definitely be expecting the wave 5 to push itself above 14,900. And again, as I said yesterday's update, that it really does begin to look like we should break 15,000. So the zone right now, as it stands, is 15,000. I'm actually going to go from there, and that's 15,020 all the way up to 15,200 in that area. I don't suspect we're going to get to these. That would be quite a jump. Can it do it? Yeah, we've seen a lot, but I'm not expecting that. So for tomorrow, I'm expecting a continuation for the subminute wave 5 to complete the subminute wave 3, set the stage for a subminute wave 4 correction, and then once that's in, to again set the stage for the subminute wave 5, which will complete the minute wave 5, which will complete the minor wave 5, which will complete the intermediate wave 5, and then the primary third wave. So we continue to go in that direction. And we did see this, the buying was relatively strong today, but the selling was equally as strong in the other markets. Now, whether that was corrective or whether the S&P and the other markets have reached their peaks, I doubt that, because I don't believe that the NASDAQ all by itself will just chase itself higher another 200 or 300 points. That would be quite a feat. And again, stranger things have happened, but that's not what I would be expecting. I think there has to be a little bit more broad-based move in altogether. And that's kind of where I'm going to leave it. Continue to trade what's in front of you. In other words, it's like what the market is doing at that moment. It's perfectly priced. We just have to trade it. And the only way we're going to do it, if it's falling outside of the limitations or the expectations that we're expecting for the day, then we have to rely on the moving averages. And then our Fibonacci resistance and support levels that we put in. Again, I leave these on because those will be, it's measuring the fifth wave, but it also is, as it breaks these resistance levels, I'm going to back down, they turn into support. And at this juncture, I still would not want to see the market drop below 14,590. And for sure, I don't want to see the market drop below 14,422. A drop below that level would really start to tilt the scale to the fact that this is all done. We are so close to finishing it. If it starts to break down now, we have to work out where things failed and adjust the count. But it would start to suggest that it's all done and we're now moving into that next corrective phase. So that's the outlier. But I again, even though this was a decent, it was over 100-point drop from high to that low. And it was very tradable and was very worthwhile. And so that's what I mean, but we trade what's in front of us. Even though we were expecting stronger upside in the S&P today, the downside moves were profitable in terms of putting trades on and making some money. They were actually profitable in both directions, but more so because the selling was more steady and heavier in the S&P than it was in the NASDAQ. And I'm going to leave it there. And the next update will be Wednesday, July 7th.